Hey guys, what's up? My name is Matthew Spazzini and welcome back to my channel. I'm here with New Millennium Wealth, and today guys I wanted to do a really cool trading video where we're talking about IPDE and the power of IPDE and the four-step process. Now many of you may not have heard this of what IPDE is, so I went ahead and I kind of drew a little something here. I mean nothing big, but we have right here IPDE. Identify, predict, decide, execute. This is the four-step process that every single trading strategy has to have. Every trading strategy, whether you know it or not, you should probably have this. You probably do, okay? IPDE. What is it? How does it work? And how can you use it in your trading plan? That is the most important question to ask. So let's go ahead and get into this four-step process. So first and foremost, I'm going to go ahead and kind of delete. This is a trade that I took earlier in the week, okay? I took it, well, actually, I took it last week on the 21st of May, so that would be Thursday. So I took it on Thursday last week. Now, when I came into the market, this is what I was looking at. I didn't actually see all the stuff that was in front of it. I had no idea. This is all that I was looking at. And I kind of see how, yes, we are bearish, but currently we are in a bullish retracement pattern right now. So, and then eventually, as you guys saw, we ended up kind of having this big, massive decline, and we came up here, retraced again, and came up again, breaking above this structure level. So for me, this is where we decide what we're going to do. So first and foremost, you have to identify what you're looking at. And this is where technical analysis and chart reading definitely comes into play. So first and foremost, what do we have? We are going from the bottom left corner of the screen to the top right corner of the screen. If you guys haven't checked out my video on how identifying a trend, you need to go check that out. In that video, we cover a lot of how to identify the direction of the market. It's a really great video in my personal opinion, but of course it is. I made it after all. But anyways, so we're going from the bottom left corner of the screen to the top right corner of the screen, ignoring, of course, this bit right here. So we are bullish. We are currently bullish inside of an overarching bearish trend. So, and what we did in here is we broke structure right here. Now, we didn't make a new higher close, but we closed above the structure. We made a new structure high with regards to this structure. Of course, we're still inside of this, so we can't say that we've made a new structure high with regards to here. But we have with regards to this. So we've identified what's going on. We're bullish. We're heading higher. We've broken above structure. Now the next thing is to predict, right? And what we're going to do is we're going to predict where we think the market is going to go from here. Now, obviously, I've already seen this play out, but I didn't see it play out before I took the trade originally, right? I had no idea what the market was going to do. I took a guess. I predicted what I thought the market was going to do and what it was going to accomplish. Man, it's actually really, really hard to draw this in when you don't have, when normally you don't have to get stuck on the corner like I'm getting stuck right now because, you know, you generally see it's a little higher. Well, anyways, it doesn't matter. You guys get the idea. We're going to be predicting. This is my prediction, that the market's going to come down to the 618 fib retracement level, and then it's going to rally higher, giving me a new higher close above the 70.10. Now let's see if this actually does happen. First and foremost, we place our 10 pips below the low here, so we're looking at 69.2. We went past it. 69.8, close enough. And then we're looking for this right here. Now, let's see what happens. We're going to go ahead and just move the market forward tick by tick. Right there. We got entered. So we've predicted where we think market's going to move. We predicted the market was going to move down here. And now we're predicting the market's going to move all the way up here. So now that we predicted, we're going to decide where to place the entry. Now, I kind of skipped a step there, or I kind of did it without saying it. So first we identify what's going on. We have a bullish trend, and we're currently breaking above structure, that therefore the market is telling us it's going to continue higher, or that it has a high chance of continuing higher. So then we predict where we think the market's going to go. We think the market's going to go higher, but it's going to make a retracement first before it does. So then we decide what we're going to do. We're going to place our entry and our exits, right? Our entry, our target, and our stop loss. And that's our decision. That's the decision-making moment. Where are you going to get involved? And after you get involved, where are you going to get out? How are you going to get out? Those are the questions that need to be asked. So when we did this, we went ahead and we drew a fib retracement tool from the swing low to this swing high. And this is where we got our entry. Now, of course, the entry was a little off because we were stuck in that corner. We couldn't really get the best entry. And this is where we decided we were going to use the 618 fib retracement level after measuring from this swing low to the swing high to decide where we're going to place our entry. So this is the process that you go through. A lot of this you go through when you're creating your trading plan. So it's important to understand the process and everything. But so now that we've identified, we predicted, we decided, now it's time to execute. So we went ahead, we placed our entry, and we executed, right? We placed the entry. We decided where it was going to go, and then we did it. We actually took action. It wasn't all words. We took action. We placed an entry. We placed a stop loss. We placed a target. And now we're looking to see what happens. And as you guys saw before, the market goes a little bit around here, goes a little further down, and as you can see, it's going to go higher. I love it when you actually know the future, right? It makes it so much nicer. But now, so that's it. We identified what the market was doing. It was bullish. We predicted where the market was going to go. We predicted it was going to continue to go higher. It broke above structure, this structure level right here. And then it retraced. That was our prediction. It was going to our prediction was it was going to go higher, but it was going to retrace first and then rally. And then we decided where to place our entry, the 618 fib retracement level, and then we executed by actually doing it. 4-step process. Easy stuff, guys. Easy stuff. It's really not that difficult. Let's do it again. Right here, I'm not going to know. I don't honestly know where this market's going to go. So, but I think I have a pretty good idea. So once again, we're still trending. We're still bullish, right? So far, the market hasn't reversed yet. So I've identified. Now I'm predicting the market's going to, now that it's broken above this structure level here and here, my prediction, and here, I predict that the market is going to come back down, retrace, and then go higher. Now, question is where is the market going to come back down? You could draw your fib retracement tool from here, and you could get your entry here. This is one area you could do this. You could draw your fib retracement tool down here. Again, another entry right there. Or you can decide to draw your fib retracement tool all the way down here and which gives you another entry. Now, I wouldn't decide. Now, we have to make a decision at this point. Where are we going to place our entry? Because we can't take all three of these trades. What if all three of them are losers? I mean, I guess we could, but it's not advisable. Personally, what I would do, I'm going to go with the first option, measuring from this swing low right here to this swing high. That's the decision I'm making, is I'm going to go from this, this area. And I'm going to make the decision that we're going to retrace and extend. That's my prediction. That's my decision I'm going to make. If I get stopped out of there, then I'm going to go, I'm swinging for the stars, right? I'm going to put my entry all the way down here. We're measuring the actual big movement here, the actual the biggest trade that we identified, assuming that this fits inside of my risk analysis and my risk tolerance. I can't take a trade that's $200 or, well, over $200. I think I can take a trade that's $200, but not anything that's over that. So assuming that this doesn't actually ruin that, that's my decision. And then we put our entry on. Now I'm going to execute. And you guys are going to get to watch this live. I will actually post this trade If I get long, eventually what might happen is we might just bounce off the 382 retracement level and go and extend higher. That may actually happen. We may never get a chance to get involved in this. So we don't really know. We are overbought on the relative strength index down here, although that arrow is covering it up. But if you look over here, the numbers, we are currently at 87, so we're definitely overbought, which usually means the market's going to come back. Is the market going to come back to 618? I really don't know. But we've done our 4-step process. We've done IPDE. And that's all we can honestly do. I'm going to bookmark this. Let's actually check what's going on the daily. A lot of times it's a very, very good idea to check on the daily before. So we're kind of coming up here. We've got a big green candlestick wick. We are not oversold or overbought on the RSI for the daily chart, but we are kind of bullishly coming up here. You know, it's so hard to determine what's really going on. Right now, we're hitting a lot of resistance levels. If you look left, structure leaves clues, we're actually hitting a resistance level that got hit 3 times on the daily chart. So we're actually hitting a lot of resistance level. I wouldn't be surprised if this ends up rolling over and we end up maybe getting entered into those trades, and then we end up rolling over and getting stopped out. That could absolutely happen. But there's a lot of different decision points here that need to be made. And in reality, if we continue higher, then there's a resistance level here, like right here, these two right there. So there's lots of resistance levels for us to get involved, to look into. Guys, if you're not looking on the higher time frames, I struggle to look on the higher time frames. I struggle to remember to do that, but it is a good idea to do. It's something I highly encourage you guys to do. The higher time frames are very important, and they help you to determine what your market movement's going to be. But that being said, we'll talk about higher time frame analysis and all that kind of stuff later. But guys, that's the 4-step process. Identify, predict, decide, execute, IPDE. If you're not using that process, and most of you probably are, and you probably just didn't even know it. I just put, it into words because that's what my mentors actually taught me. They taught me the IPD process. So that being said, guys, you got to identify what the market is doing and then predict where you think it's going to go. Decide by deciding on an entry, and then execute by actually placing that entry. Now, you shouldn't be doing this if you haven't done your back testing or anything of the sort. All right? You shouldn't be doing this if you haven't done the necessary legwork to do it. But if you have, then it's an excellent, excellent, excellent thing to do. Guys, IPDE, it's a very, very powerful 4-step process that we all go through, and you need to make sure that you are doing. Don't just place a trade and not know what the market's doing. You didn't identify. You're predicting, but how can you predict if you don't identify, if you don't actually know where the market is moving? And then if you're going to go ahead and predict and make a decision, then you don't want to be moving your stop loss around or getting out early. That's not executing. You're not making a decision. You made a decision, but now you're changing your decision. You can't do that. You shouldn't do that. It's very, very unhealthy for your trading. You're sabotaging your trading. This is why it's so important to backtest, to build the belief system in your strategy so that you can allow IPDE, the 4-step process, to actually work for you. But it's not going to work if you don't actually use the process. It's not going to work if you haven't done all the legwork necessary, if you haven't done the back testing, you haven't done the forward testing. It's not going to work if you don't have a trading plan. But guys, IPD is a very, very, very powerful 4-step process that we all go through in our trading. That is the process that every trader has to have if they want to be successful. You have to have that process. A lot of traders, if you're doing it the right way, you're doing it and you may not even know it. But for those of you who are not, you don't have a back-tested strategy. You're not identifying where the market is actually going. Sure, you're probably making predictions and you're probably deciding and executing, but do you really know what you're doing? Do you really know where the market's going? Guys, IPDE, it's incredibly powerful. Identify where the direction. Predict where you think it's going to go based off of current technical analysis. And then decide where you want to get involved, where you want to get out, and then execute, then actually do it. It's a very simple process. It's not difficult or hard to understand. But it takes a lot of leg work in order to do it. Back testing, trading strategy, all of that stuff. Forward testing on live data. This is what is necessary to become a consistently profitable trader. But you're not going to get there if you're not going to be using the IPDE process. If you're not going to be using a 4-step process, you're not going to get there. You've got to use that. So guys, I hope you enjoyed this episode. If you did, like the video, subscribe to the channel. If you'll do that, I'll see you guys in the next video. As always, know the risks, plan accordingly, and have a great day.